Hi traders, you're watching a wrap-up of the North American session. Due to soaring inflation, lawmakers in the United States Congress cannot come to the common denominator. The Fed policymakers advocate for a sharper rate hike. The White House is urging Americans to leave immediately Ukraine, Belarus and Trans-Dniester due to the threat of a full-blown military conflict. Washington still warns that the Russian military is in position to invade Ukraine within a few days. US stock markets are trading in the red, extending a decline that began at the end of the last week in light of the highest CPI score over the recent 40 years. On Monday, the Federal Reserve held an emergency closed-door meeting. Details of the meeting did not go public, so the market gave no response to the event. The Nasdaq closed flat on Monday, the Dow Jones shed 0.5% and the S&P500 closed 0.15% down. Today, the S&P is drifting lower within the corridor between 4,360 and 4,440 points. The index has already lost 0.4% to trade at nearly 4,427. We see how the US stock market responds to corporate reports of top American companies for the fourth quarter. High-tech giants such as Meta and Apple have already reported on their earnings. The season of corporate earnings reports is coming to an end. 358 companies included in the S&P 500 have released the reports. Revenues of 78% have beaten expectations. Nvidia and Walmart are due to report this week. Today, the minutes of the latest Fed's meeting are on investors' radars. They will be of secondary importance for market sentiment as the inflation data outlines the minutes. Today, investors find out the data on factory inflation in the United States. The PPI surged 1% in January on month, following an upgraded 0.4% increase in December. The annual PPI edged down to 9.7% in January, following a 9.8% growth in December. The core PPI, excluding food and energy prices, also rose 0.8% in the first month, stronger than 0.6% increase in the previous months. While geopolitical tensions are brewing up and global stock markets are trading in the red, the US dollar is advancing across the board. Its index has grown 0.2% since yesterday. The US dollar is growing moderately because stock investors refrain from a wild panic despite negative sentiment. Having assessed risks, investors prefer safe haven assets such as the US dollar, treasuries and gold. For the time being, the precious metal is winning favor with investors. The US dollar is less confident that gold and treasuries, and at the same time, the euro is losing ground against the US dollar on the back of rising yields of treasuries. The US dollar has settled at elevated levels, trading at nearly 95.98. The expected corridor is seen between 95.90 and 96.50. The greenback is holding the upper hand over its Canadian counterpart. A 6-day blockage of the Ambassador Bridge, the busiest land border crossing between the United States and Canada, reopened late Sunday, so the traffic is now circulating at full capacity. The USD CAD pair dipped to 1.2700. Besides, the currency pair is wound down by expensive oil prices trading at one-year highs. Hence, analysts foresee a further decline of the trading instrument. Though the USD CAD pair has rebounded to 1.2718, analysts expect the pair to trade in the corridor between 1.2680 and 1.2780. Bitcoin regained its footing overnight. It recovered from $42,000 to $44,159. The most popular cryptocurrency found support from the Canadian government. Bitcoins, as an alternative to the frozen funds, were donated to participants of the Freedom Convoy that blocked the Ambassador Bridge between the US and Canada. Once the blockage was lifted, the government announced a crackdown on money laundering. Citing Canada's Deputy Prime Minister, all transactions, including digital assets and cryptocurrencies, are subject to tough regulations. Despite the cautious mood among crypto investors, Bitcoin is heading upwards. The intraday corridor is seen between $42,497 and $44,319. The key target for Bitcoin is $55,500, the highest level of the last week, and the next upward target is expected at $51,100. There are the main developments of the North American session. We appreciate your feedback and are ready to answer all your questions. See you tomorrow.